Hey traders, checking on the stock market today. We had a pretty flat day out there for the broader indices, but we had action in some of the Reddit names going wild. We had the cannabis sector see a high volume pop at the end of the day. So there's a lot to look at under the hood. We'll also do a little quick trade review on the energy sector. Let's get into it. So the S&P 500, the bulls are pleased in the fact that we held the gains from yesterday, and we just chopped around a good bit sideways. You can see we had a fairly wide range. The good sign for the bulls was first 5-minute oversold conditions did mark the low of the day. So that does show some notable dip buying, but it also did not lead to a higher high at this point. So I'm just watching the high, the low, and an hourly lower high just formed. So again, it's just a sideways tightening hourly range. If the hourly downtrend confirms, we're going to look for the possibility or the likelihood of daily consolidation. And then we'll be looking for a higher low. The bulls don't want to head right into daily consolidation from here because that's a bull break without much follow through, which would then have us watching rising wedges. And I don't think this is a rising wedge at the moment, but over the next couple of days, I'm going to be paying very close attention because something like that, more of a channel. But if you look at the NASDAQ is a triple top right here. We did break the level, but no follow through. So again, the bulls really need to follow through to not form a rising wedge. So tomorrow's fairly important as to whether or not the lows of today hold. The dollar broke the double bottom of support. That's a good sign for the bulls. That is following with the resistance break of the S&P 500. One thing that I'm watching big picture major here, part of helping me find the broader market bounce over the last 6 weeks was knowing that the dollar is due for monthly consolidation and then starting to recognize the details. And if you've been watching these videos, we are recognizing the details together. The first weekly lower high of the year, the first weekly confirmed downtrend of the year, the first loss of weekly EMA 12 of the year. Just step by step, we kept getting little clues of momentum is shifting, the character of this chart is shifting. And that led to metals bottoming, commodities, and all that. So now what I'm looking at, I'm anticipating the dollar most likely scenario is a monthly high or low. That being said, I have no idea if it's going to be at 104 or 98. So I'm watching short term for a monthly high or low. We've got EMA 12 as support. That's oftentimes where I look for an initial bounce to try and take place. And again, oil for me is similar to this setup going back in time. Look at this monthly. Again, it was oil bulls. The sentiment was just complete bull control. We topped out. We bounced off monthly EMA 12. Granted, that was not the monthly high or low, but that was a level that we initially bounced off of. So I'm watching the dollar, and I'm also watching if we see first daily oversold conditions, which we're on the verge of. And you could say we already got there, and I wouldn't argue with you, but I'm watching for the possibility that first daily oversold conditions aligns with a monthly high or low attempt. So at this point in time, the bears have complete control of the dollar. It's a very clear downtrend. Again, I'm just giving you information. This is what I'm watching over the next few weeks into the end of this year. And this would be notable because if the dollar forms a monthly high or low, who's going to be forming a monthly lower high? Well, QQQ. Anything under 333.82 is a monthly lower high. That's over 10% away. SPY, anything under 430 is a monthly lower high. We're much closer to a SPY bull break than a QQQ bull break. But even the metals, look at gold. Gold has a ton of space for a monthly lower high to be the result of this bounce. And so does silver. Silver, anything under 26.95. So there is a possible scenario heading into the start of 2021. Nope, we're not going back in time. 2023, that we have tightening monthly ranges for the first quarter. If the dollar sets a monthly high or low within the next 2 months, and we top out for monthly consolidation in the S&P 500 and the NASDAQ and in the metals, then next thing you know, the first quarter of 2023 could just do something like this. And that could take us into the middle of next year. So again, I'm not putting a ton of weight into this. I'm not establishing long-term positions based on this, but I know that I'm watching for this to happen. And I'm going to be looking for clues on the shorter-term time frame, starting with the daily as the first baby step, but we don't even have that yet. So again, I know what I'm looking for in advance. I don't have a bias that it's going to happen. I'm not sitting here thinking I'm going to be right about this, but it's enough for me to pay attention to. NVDA, bull break, a little bit more follow through the S&P 500. Daily uptrend is our guide. Where's the monthly on NVDA? Monthly resistance, 192.63. At this point in time, a lot of names are looking at monthly resistance as the next key level. Tesla, 201 is a key level. So watching that. We have a lot of work to do for Tesla to shift momentum. We're just looking for a weekly lower high to be the result of this bounce. Anything under 237.40. So Tesla, lots of work to do. Is this downtrend support still in play? I like that. 1, 2, 3, 4 touches. This is more of a channel than a wedge or anything, but worth paying attention to that. Healthcare, higher highs. Again, all we care about is the daily uptrend. That's a lot of volume there. So I zoom in and say, where was that volume? It was the end of the day. And it looks like if I zoom in, a little bit of selling volume there at the end of the day. Oh no, it was shares settling after hours. So if you see a volume line like that at one price after hours, because we know if that volume hit after hours, liquidity is not high. The price would be going nuts. So if you see that, you know that's just shares settling from earlier in the day. Anyways, the daily uptrend, keep it simple. XLF, XLV. XLF is a potential rising wedge. Again, the fact that we break resistance into consolidation and we break resistance, and if we have a red day tomorrow, going to be paying attention. Look at the volume on the weekly. Well, it's not going to be that notable, but the volume the last 2 days is notable. And going to still keep it simple. It's all about 35.14 to see if the daily uptrend can remain intact, but we're watching for signs. Again, we look at the character of this chart for the last 6 weeks, and we can say the character of this chart changes when the daily high or lows are lost for the first time, just like the dollar character changed piece by piece on the longer term time frame. IWM double top at 189.56, unable to break to a new high. If we were to consolidate tomorrow with another red day, that would be a notable rejection from resistance. XBI, not much going on. Again, I still don't have a ton of clarity. The break of 82.12 was nice for follow through, but other than that, bigger picture, I still don't have clarity on the biotech sector. CCJ, red flag. Bull break of this equilibrium into a very weak day. Bearish correlation and a weak close. So that is cause for concern for bulls. Again, when you break an equilibrium, to make it convincing, you've got to take out multiple levels as soon as possible. Because now there's doubt. You break one level into a pullback, you've got doubt. If you break one level and then break another level, you've got conviction. Those are two very different things when you're dealing with an equilibrium break. If bears confirm an hourly downtrend and they have a lot of space for an hourly lower high next bounce, that's a red flag. So keeping an eye on that possible red flag. There's an uptrend support line to be keeping an eye on, like that. So overall, I'm still bullish, the broader market, but there are places I'm scouting bearish. The energy sector, as I mentioned yesterday, I was trading it bearish all day today. That's going to be some trade review in a minute. And again, just a bit cautious. Just a bit cautious of a lack of follow through. Tomorrow's going to be telling. Green day tomorrow, bulls keep their full control. Red day tomorrow, okay, we're heading into next week where we have to be watching for the possibility of the financial sector to lose its daily uptrend. So cannabis names stood out today. CGC, nice volume and a laggard move. I expected more out of the cannabis sector yesterday when the entire market was ripping and it wasn't really doing much. But TLRY, increasing bull volume, and bigger picture, TLRY is looking for a weekly bull flag and trying to confirm the first weekly uptrend, at least the first convincing one, in a long time. And look at this double top of resistance. If we can bull flag, I mean, this is the psychology behind a cup and handle. This is not a cup and handle because it's at the bottom of a downtrend, and it's less efficient as a cup and handle because as soon as you break resistance, you've got a ton of previous price levels of resistance. Preferably, it's at the top of an uptrend, so when you break, there's no resistance, and you follow through significantly. That's why it's such a powerful breakout pattern. But this is, if you just look at this, it's a cup and handle in the sense that we cupped, we failed resistance, we bull flagged, and if we take out this double top, suddenly we're at the highest levels that we've seen in 7 months, 6 months, 6 months, 5 months. You get the idea. And it would just be notable balancing out. Again, it's supply of shares outweighing demand for a year. And now the scales have evened out, and the scales are trying to flip for demand to outweigh supply. And for a bull cross of the weekly EMA 12 and 26 for the first time in years. So watch the cannabis sector. We're watching for news. I'm going to do a Twitter Spaces today at 5 p.m. Check out our Twitter talking about cannabis. But we're watching for news on the SAFE Act. And perhaps today, end of the day, had a little something to do with that on the U.S. side of things. Equilibrium bull break. So here's follow through. We broke 1218, and minutes later, within 15 minutes, we're breaking 1241. The volume was huge. At the start of the day, I said, keeping an eye on MSOS, 1218 is in play. Bulls want to close over 1218 with more than 2 million shares traded. We had 4 million shares traded. It's the highest volume in a couple weeks. And now we're looking at this high of 1313. And again, it's just a balancing out and a shift trying to take place on the longer term time frames. And so I took TLRY today on the high of the day break for just a flip and sold half and still have half of a swing just in case, because I see this kind of action and volume and I say, maybe it's insiders buying, maybe we get a headline. So going to hang on to it for that possibility. And for MSOS, again, if you get familiar with this sector, this is what it does at the end of the day very often. MSOS buys individual companies, and oftentimes that leads to an end of the day bump. And for those of us that watch this sector daily, we're just sitting there at 3 p.m. and we're just waiting. And so I was sitting there and waiting, and I saw this 1 minute volume starting to come in, and I know we're right under resistance, and I know that the cannabis sector did not respond yesterday to the bulls as bulls would have hoped. And so 3 minutes into seeing that volume, I make an entry, and I've done this 3 or 4 times in the last 2 weeks. You can see I entered at 1197. I exited half just under 1218 in case we reject, and now I've got half here after hours as some buzz is spreading about this ticker on social media. Just hey volume, breakout, clear tight range, trying to break bull. But I've tried this 4 times and it works. Sometimes it'll work for a quarter of a day maker. Sometimes it'll be break even. I've done this same trade, make a bull entry into the end of the day momentum, sell half fairly quickly, and then it doesn't follow through and I stop out break even. And it's just positioning myself in low risk, high reward scenarios where if it does follow through, if it is the real deal, then it happens like this and it ends up being, a potential multiple day maker where the risk was not very high. So we'll see what we get, but definitely worth paying attention to this sector over the next couple of days because of how close we are to a longer term break. So gold and silver, great follow through. The daily uptrend is going to remain our guide here. Again, we're scouting monthly lower highs, but not as long as the bulls have the weekly uptrends in their favor. And very nice follow through for both gold and silver at this point. And off of the lows, we're now up over 20% on silver. %30 on silver. Gold, not as significant, but it did see a nice bull move today as well. Weekly bull flag confirmed. So again, it's just a question of, are we going to see monthly tightening ranges? The bounce retracement on gold at this point is trying to get towards 50%. And we know if we get to 50%, that's going to increase probabilities that we do something like this. Miners, nice follow through. This is the chart that I have to look at and this is a missed move for me. And it's funny because, what I made in MSOS today as a day trade would be if I had the swing position that I want in GDXJ, I made that in MSOS in 45 minutes today, but it's almost more painful to see this chart just run away without me. And it's just recognizing that I had 2 opportunities. And so I have no excuse in terms of feeling FOMO because I had my chance and I didn't take it. And I'm okay with that. Obviously, in hindsight, it would have been nice to grab some IRA position, but I was unsure of the broader market at that point in time. We were very close, in my opinion, to rolling over into weekly consolidation. And Powell obviously helped with that. But congrats to the bull miners that do have positions. And again, same thing. Just daily uptrend as our guide. Very nice follow through off these lows. Scouting a monthly lower high compared to 51.92 And if we're going to see a long-term uptrend, again, this was not sustainable. This was a great move off the CVID lows, but we did not establish support on the way up, and we gave back 85% of it. We have to see a monthly uptrend confirmed like this for some sustainability on a long-term move. So we have to see a monthly higher low and higher high at some point. Just like all bulls want to see the dollar confirm a monthly lower high and lower low. Energy sector. So energy is nice and tight here, and I still keep seeing this relative weakness the last 2 days, and I am looking for a bear break of 89.05 if we see any weakness in the broader market. I know if the broader market keeps heading higher, XLE is not likely to break down, at least in the near term. But I've traded XLE in the past 2 days more than I have in the past 2 years, and I really like the way that it trades. And I like watching oil and the energy sector at the same time. Today I had a split chart up with one on each, and I don't do that often at all. And it's also practice for futures. I'm practicing, staring at oil all day. And so what? So this is just, again, going through the mindset of setting up this trade to short XLE today. And it was a nice, solid win. And so, started off the morning right after the bell. Oil 5-minute double top and XLE new low of the day. I'm looking at this first 5-minute candle. New low of the day after an initial bull break. So we broke the high of yesterday. We quickly retraced to a new low of the day. That gets me interested in the bears. Bears have to confirm short-term downtrends to gain control. Oil has to lose the 5-minute uptrend. That oil top did not end up being the top. This was the move right here where I recognized that double top. And we kept grinding higher. I was looking for oil hourly consolidation to help with energy sector hourly consolidation. And so that's the first post where I am interested. So then from there, I'm in an XLE short playing off of the 92.06 5-minute lower high. Oil broke bull into a potential little climax. So I was looking at this 5-minute candle. And again, I was wrong on oil. I was looking at this 5-minute candle to be a potential climax just because we hit a new high straight into a pullback with a decent amount of volume behind it. So I'm seeing oil. I'm looking for signs of the 5-minute uptrend to be lost for hourly consolidation. And the energy sector at that point in time, it was this 5-minute lower high that I played off of, and I was on the 1-minute, 2-minute time frame, real zoomed in, and it was a double top. And so as soon, I know anything under the high of the day is a 5-minute lower high, and I see that double top and I short it. And then I exit partial on the initial move down, and then throughout the rest of the morning, I exited more and more just to get down to I flipped it a lot. I was flipping it a lot. And the reason I was flipping it a lot is because I had a nice clear pattern. I'm clicking the wrong buttons today. I had a nice clear pattern of this potential falling wedge that I was cautious of. But what I would do here is, okay, bear break, no follow through. I exit, a third of my position. And then on the bounce, I reload a third. And then I exit a third, a bear break with no follow through. And then I reload a third. And then on this bear break, I sold into some of that again. And I got down on that move to 25% position. This is what I'm going to swing. And so I've got an oil or an XLE swing again, just because I only have long exposure. And because of cannabis, I now have a decent amount of long exposure. So I want a little bit of something bearish just in case we see weakness overnight. But we have to see the energy sector confirm the hourly downtrend by breaking the low of today. And then it's all about that daily level of 89.05. So from there, not comfortable until oil shows some hourly consolidation. So it took a while for energy sector weakness. And oil kept holding on strong until XLE new low of the day, doing its own thing versus SPY due to oil strength. Bears need to see oil with a 5-minute head and shoulders to shape up hourly consolidation. And so you could see that's early pattern recognition where we hadn't even started forming the right shoulder yet. But just knowing that hourly consolidation is inevitable and seeing the setup for it because of the size of the 5-minute pullback, creating space for the 5-minute lower high. And so that confirms the head and shoulders, and that was the high of the day. And we then consolidate from there with a pretty sizable pullback. So that's just an example of how the trade developed, how I'm watching multiple things, how I'm using information from multiple charts to trade. Natural gas bears keeping their short-term control. Again, we got the red flag a couple days ago. Weekly consolidation is close, not official, but 4-hour. Keeping an eye on these lower highs as our guide. We got a trend line to be watching as well. And that's that. Do good things. I got to run to do this cannabis Twitter spaces. I hope you had a good day, and we will see you soon. He doesn't care.